you earlier participated in this panel discussion about new urban engines, emerging innovation zones. Could you briefly share with us your thoughts at the panel, and also what's your assessment of the overall global investment landscape today?
Okay. First of all, about the special economic zones we talked about this morning, it's related to AI, or generative AI. This is a new form of special economic zones. It's small, but with huge network. That's the feature. And then focusing on the AI. It's like incubating all a kind of Silicon Valley specialized in AI. That's happened in China, in the cities like Beijing, Tianjin, in Hangzhou, in Shenzhen, for example. It's also happening in the US. Of course, it's more of Ivy League that for very few countries having this. But the trend is that it's going to grow and grow very fast. Now, the discussion today is more focusing on the challenges and opportunities of further development of these zones. So my message to the panel and through the panel to this forum is basically there's a great potential. This is just the starting of a very new types of zones, but it needs to foster partnership with the other zones, because there are over 10,000 special economic zones of different types, science parks, innovation hubs, free trade zones, economic development zones. All these type of zones, for them, they provide the market, they provide the platform, they provide the kind of opportunities for innovation in the process of application. So this is very important for spillover effects of these R&D in AI. It is also important for the kind of development at the international dimension, international level. For example, all these AI-driven zones could have collaboration with other countries, with advanced countries, particularly in those countries are developing their smart cities. So the application could be immediate, beneficial, and also mutually reinforcing through the application of the AI, the new outputs of the R&D. So this is one dimension. The second dimension of international dimension relates to international collaboration with advanced developing countries and even other developing countries to empower those countries in the application of AI, where they provide the market, they provide the kind of useful source for application and feedback. So this is another type. The third type is international cooperation, meaning the government to government, or just the R&D firms to R&D firms to have joint zones in other countries for the application. So these are all very important dimensions. In essence, synergizing, mutual benefit, and to share prosperity for all. These are important for sustainability and inclusive growth. So that is the essence of this morning's discussion. It was President Gong who was moderating the chairing. He was the former president of World Engineering Organization, so he's quite experienced in leadership in this area.
You come from a background with rich knowledge in foreign direct investment, and I've noticed that earlier this year when you participated in another forum, you also talk about this. You said that services now account for about 70% of global FDI, and you predicted that the long-term trend will be continued expansion of service sector, while the manufacturing sector will be performed less, I'll say, optimistic. So could you share with us about what made you come out with this kind of prediction, despite there is a rising trade barriers and protectionism, and also why is less affected, the service sector, why is less affected by current global turbulence?
Yeah, it's a very good question, because at the moment the world is focusing on trade wars, and trade wars impact directly on trade trading goods and impact on market-seeking FDI, or efficient-seeking FDI, so to speak, export-oriented FDI. So when we talk about that focus, we need to bear in mind, over the past decade, foreign direct investment were mainly driven by services. And the services, investment in services account for over 70% of the global FDI flows. And that is the major trends, and I see it will continue to drive the global FDI flows, even against the current trends of the protectionism and all these problems. Why do I say that? In fact, there are several factors. One is the service sector has been growing very fast, both in advanced countries and in emerging markets and developing countries in general, including in China, including in all those Asian countries. We have seen that the growth rate is going up, the purchasing power has been increasing over the years. So this is a kind of, because service FDI is a market FDI in nature, market-seeking FDI in nature. So that is one factor. Secondly, it's driven by technology. Technology for e-commerce, technology for digital banking, and the transformation of all these services enabled first by the digital technology and now by AI. So all these will drive the foreign direct investment in services. The third factor relates to the servitization of manufacturing. We see the new forms of manufacturing, particularly advanced manufacturing. And then you see that marketing, R&D, all these development related to advanced manufacturing that are service enabled. So this is extremely important, that services goes with manufacturing in outward investment. That also relates to the current factors, the new one, I see, while in the future is going towards that direction. For the current drivers, technology advancement, sustainability imperatives, and the geopolitical dynamics, all these will drive the massive transformation of the global supply chains and the value chains and supply chains. One of the key implications is that when you move the transformation from value chains to industrial clusters, which means you have multiple locations for investment producing the similar products instead of a long chain to produce for the whole market, for the whole global market. So you have multiple manufacturing clusters in different locations. Fortunately or unfortunately driven by the geopolitics. And also technology enabled for industrial clustering rather than global value chain. And the sustainable imperatives, there's also implications reducing the cost, environmental cost of transportation and related issues. All these will generate a kind of restructuring of manufacturing, moving to different more locations. We call it diversification and the resilience building. And this implies that when manufacturer base are moving and diversifying or investment diversion, services have to be with the manufacturing. So what we call producer services. So the producer services means investors in the services sectors will follow the manufacturing. So all these will provide momentum for the growth of FDI in services. So that's what I see the potential. Having said that, admittedly, the trade protectionism and the geopolitics also affect services a lot in a negative way, particularly in the digital area, advanced technology, when there's kind of the kind of cross-border data flows. Still very sensitive, very difficult, but it has been the case in the past. In that absence, services, FDI in general, has been growing, and it will continue. So
yes. You also mentioned that some sectors are still attracting strong FDI, such as renewables, semiconductors, electric vehicles, and communications.
Yes.
So which of these do you think are likely to lead the way in 2025, and where do you see the strongest regional momentum?
These are the sectors I identified last year, end of last year, based on a key indicator. One of the key indicators, it is the greenfield announced projects, the number of projects and the value of that. Because by the end of last year, we see all these greenfield. When we say greenfield, it means new projects, not cross-border merger and acquisitions. It's new investment in projects announced. The deals were concluded. That has been increased. That's an indicator for future investment, actual investment in the countries. Having said that, given the kind of disruption of the huge challenges since January of this year, some of the projects may be delayed, may be shelved, may be reformulated. So that will affect that. But that's the lead indicator for the future investment. Also, the statistics that came out for the first 2 quarters of this year, the greenfield investment announcement, the deals announcement, including what we called in those sectors, also increased. Even though at the general level, it's declined, but in those sectors, there was still increase. So it shows the robust of these sectors. There will be growth momentum in these sectors, plus the services, because these are all manufacturing sector statistics, plus the services. So this will drive the resilience of global FDI, not necessarily at a new high level, but at some reasonably strong level of flows. So this is one factor. Another factor is that to look at FDI stock. This is only flows. FDI stock meaning that foreign investment already in the country, in operation. So these foreign investment stock, whether it's manufacturing or services projects and facilities, they are there, they are still functioning. Even though their production may shrink a bit, or their slowdown of growth, they are still there to. And what does it mean? It means foreign direct investment still playing a big role in the economic development, job creation, exports, tax contribution. These are the traditional factors of contribution of foreign direct investment remains, even though they may go down a bit, but still together is still big.
Let's look at China's case here. Chinese policymakers have introduced the goals of high quality development and also stabilizing foreign investment. What unique advantages do you think China still offers to global investors in today's turbulent environment?
First, over the past couple of years, or 3 or 4 years, since the 2017-18 starts the challenges in trade, we do see investment in manufacturing has experienced the investment restructuring and diversion impact. Statistics shows that it's quite challenging. In the meantime, we still see the stable environment, business environment for market-seeking FDI, for service sectors. So for that, and also for high-tech, advanced technology-related areas. If you want to see the prospect for China in terms of the opportunities, then I still believe looking at the triple drivers, sustainability-driven investment. We talk about green economy, blue economy, ocean economy. We talk about gray economy, which is the health, all these things are related.
Yeah.
So, and these are more of market-seeking foreign direct investment. It will continue, and foreign investors still very much interested in the Chinese market. It's big and attractive. Technology advancement and the technology-related sectors is another opportunities for foreign investors. And then the consumer market, particularly the new malls driven by technology, by digitalization, and by AI. Mm-hmm. I think there's still a lot of opportunities. It'll continue to be impacted by geopolitics. There's no doubt about that, and that creates kind of challenges for the Chinese government to attract international investment. Mm-hmm. So that's what I can see. Opportunities there, challenges remains. And also I would come back to see the investment stock, foreign investment in the country, in the presence, still very big, is sizable and impactful to the Chinese economy.
And lastly, Dr. Zhan, what are your expectations for this year's Summer Davos in Tianjin, especially for young entrepreneurs, and also especially when it comes to fostering global dialogue on investments?
I think it's timely and important. We know that the World Economic Forum has been doing an excellent job putting the stakeholders together, business and society together for this dialogue. And this is a critical moment because of the global uncertainty, and the downward risk is huge, and we see a lot of pessimistic views now about the prospects, not only about the economy, but of the globalization and the future of the world. So engaging in dialogue, collectively assessing the situation, identifying the key emerging opportunities, finding the solutions to challenges. This is the excellent opportunity. The reputation of the World Economic Forum is the quality of participation, quality of people, quality of discussion, and the quality of the services we can see Tianjin provides. So these are all important and timely. That's what I see. And for young entrepreneurs, of course, this is a platform for not only to understand the global, the world beyond their own business, and to get global perspectives, and also to get insights from each other and from the experienced experts and global CEOs. Of course, it also created B2B opportunities as usual, so there's no doubt about that. And the World Economic Forum is very good at outreach and disseminating the outcome of the forum. So the impact goes beyond the conference center to the rest of the world. That's what the World Economic Forum is good at.
This is CGTN Radio. Hear the difference.